Welcome to another video session of the International Tax Post. Our guest today is Bill Thomson, the Asia Pacific Regional Tax Director for Time Warner. Welcome, Bill.
Thank you, Jeff.
Bill has been in the region for a long time. He's been based in Hong Kong for 20 years. He practiced with an international law firm. He has an LLM in the University of Hong Kong. And he's been with Time Warner for several years now and is very well qualified to talk to us about the challenges and priorities and joys of being a corporate tax director for a multinational in Asia. So let's start with kind of what's your top 2 or 3 issues at the moment, your main challenges or priorities?
Well, top challenges at the moment, I guess, would be with the current economic climate. I think we're finding that tax authorities around the region are becoming more concerned about collecting revenue, and as a result, that's pushing them to be a bit more aggressive than in the past. So I think most international businesses find themselves under a bit more scrutiny than they did, say, 2 or 3 years ago.
Okay.
So that would be number one, and out of that arises, of course, additional audits, additional queries, just additional work that has to be picked up by tax departments around Asia.
Okay. And how big is your team? Do you do a lot of this yourself, or do you farm it out to consultants?
Well, we farm a lot of it out to consultants because our team is relatively small. We have a large team for a commercial organization. I've got 5 people in my office, but we have to cover all of Asia, from India and Pakistan through to Australia and north to Korea. So that's a pretty big area. There's lots going on, and so we rely very heavily on advisors, both for compliance work and for planning work and advisory work.
Okay. Which countries are taking up most of your time?
Well, I think that's a pretty easy question to answer. It's India, largely.
India
would take up most time. And I think that's a fair statement for most international tax directors if you've got any operations of substance in India at all, just because of the way the system is organized there.
Can you elaborate? What is it about the Indian system that's different from other systems around the region?
Well, for example, one of the things that I point out is that the Indian tax authorities are not prepared to make compromises like other tax authorities might. If you've got a contentious situation in, I don't know, in China or Australia or even Japan, you might be able to go to the tax authorities and sit down with them, talk about what the problems are, agree that there's a solution there that both parties can live with, and go down that path. But in India, you're not allowed to do that at all. Once an assessment comes out, they're not going to talk to you. It goes to litigation. And litigation in India is a long, drawn-out process. There's basically 4 levels of appeal, and to walk through those 4 levels will take you anywhere between 12 to 20 years.
So I guess for it to be worthwhile to go through that process, there has to be a lot of money involved.
Yes and no. I mean, what you also find is that the principle can be important in tax. If you forego, for example, a deduction in 1 year because it's not worth a lot, and next year it's worth more, you're going to end up foregoing it again. And so you've really got to take a call on these things and understand, almost have a crystal ball and say, well, is this ever going to be worthwhile fighting about? Because frankly, if you give it up, you're lost.
Okay. Very interesting. Now, let's turn to, you mentioned audits. Tax planning has become, I think, generally more difficult for all kinds of companies all over the world because, as you said, governments are more focused on collecting more revenue. Lots of countries have succeeded in attacking tax shelters.
Correct.
Both in developed places like the U.S., etc., but also I think we're seeing a trend in Asia,
even in Hong Kong,
going after substance over form type issues.
Sure.
So
how
do you approach that? Have you basically put tax planning off to the side and you focus only on compliance, or do you still try to do some tax planning that may be considered subject to a challenge or a bit risky?
Well, I think that the idea of what's permissible tax planning and what's avoidance has changed a lot, at least in the 20 years that I've been in the business. Things that might have worked 15 years ago, you wouldn't touch now. And it's the way the system has evolved, and the way business has evolved, and governments have evolved. A lot more countries now have anti-avoidance provisions that they're prepared to use. And we've seen those cases be brought. You've seen it in Hong Kong. We saw it recently in China. It happens in Australia all the time. The Indians are thinking of bringing one in. So for that reason alone, you would want to be a little bit more careful. But in answer to your underlying point, I think that the days of doing a transaction without substance to it, of simply moving the boxes around in order to create a tax advantage, I think those days are pretty much gone. Certainly, anything that a major SEC-listed company would do would have to have a lot of substance behind it. And then, of course, you can add a little bit of a tax flavor to it, depending on what the business imperatives are. But it's not something that we neglect. I mean, we always look at that and we see whether there's a possibility, and in some cases there is.
Yeah, because presumably you're under pressure to keep the tax costs down also.
That's part of the job, is to do that, it's a continual battle given what's going on now.
And do you get difficult situations where you've been advised that it's not certain what the tax result of a transaction might be, and they say, well, the better view is that you would get this deduction, but there's a significant chance you won't get it? Do you get a lot of that fence-sitting type advice?
Yes, you do, and particularly in certain places. It's hard to give a clean tax opinion, for example, in India, because of the aggressive nature of the assessors and the way business is treated there, for example. So nobody will ever tell you in India, for example, that you won't be assessed. What they will tell you is what the courts will decide in the final analysis, at the final level of appeal. So that's really what you have to push people to.
So if you wait 20 years for all of your appeals, then you get the right answer.
Yeah, which is fine, because neither of us will be in that seat in 20 years' time.
Wow.
It leaves it to somebody else to pick up the pieces.
Okay. Now, what about transfer pricing? Do you spend a lot of time on that, increasing amounts?
Our office does. We have we started 7 or 8 years ago down this path in Asia. It had been a factor in the U.S. from a long time before that, but in Asia, I think really it wasn't until, say, 2000 or so that the transfer pricing really came to the fore. The job of any international tax director now is going to involve transfer pricing. You can't avoid it. It's such a big thing. You look at any major jurisdiction in Asia, they will say that the tax authorities will say that one of their major concerns is transfer pricing, the shifting of profits across borders. So that means that you're immediately in the firing line, because you've got entities there that you're dealing with, and so you have to accommodate that. And so many of the countries like China, like Korea, like India, Taiwan have come out with documentation requirements. So annually you're doing this stuff too.
And APAs, do you think either informal or formal? Is that some way to approach it?
I think that's a good way to approach certain things. There's a cost associated with APAs as well, and you have to weigh that against the transaction that you're dealing with. Also, I think you have to look and see how supportable your prices are. So, in certain instances, in certain business, there may be comparable and controlled prices available, and in that event, maybe you don't need the APA. But I do think that it's worthwhile looking at.